Just call this a live. Good evening, everyone. A very warm welcome to the audience here at this KPMG live streaming. We are here to talk about the key tax proposals in the budget and also some other important regulatory announcements, and speak a little bit about which direction the FM is taking, the tax trends and also the regulatory announcements. So my name is Siddharth Kaul. I'm a partner with KPMG. I'm accompanied by my fellow professionals. We have Nishit, Anand, and Anshul, who will throw light on their relevant sectors where they have expertise. So without further ado, let me kick off this discussion. First and foremost, I want to talk a little bit about what is the impact for corporates. And then, we'll go into the other aspects and implications of the announcements in this budget. For corporates, largely, there's a continuity of policy, so there's no tinkering in the rates. As far as the main announcement of the new income tax law is concerned, that was expected. It was told to us in the last budget by the finance minister that we're going to see a major income tax reform, and that has been now confirmed on the floor of the parliament by the finance minister. She has told us that next week we can expect to see a draft bill of that law already. So exciting times ahead. She had also promised a major reform on the customs side, which partly she has implemented already in this budget, and we'll talk about the impact of that. Anshul will guide us on that. As far as the actual amendments that she has proposed for corporates, I would say largely positive. 4 or 5 let me talk about. Firstly, there's a rationalization of the TDS and TCS provisions, which was actually a long-standing ask of the industry. So this is a very well received proposal, in my opinion. Both the thresholds have been increased as well as some rationalization of the rates has been done. TCS, in fact, on goods has been done away with, which now sorts out some of the confusion which was created due to the overlap. The next very welcome change that has been proposed is with regards to transfer pricing. Here we see a concept of 3-year block for determining arm's length price in the assessment, which is a welcome proposal. Oftentimes, each year is litigated or explained separately, whereas economic conditions, as we all know, impact sometimes beyond a year, and therefore in transfer pricing particularly, which is heavily dependent on economics, it's better to explain arm's length price determination over an economic cycle, which could be 3 years. So this is a welcome change as an option given to the taxpayers. Another important trend is the support towards startups, which continues. So there's an extension of the period for the tax holiday eligibility. And it's good that they have not just increased it by 1 or 2 years, they've straight away increased it by 5 years. And now startups which are incorporated up till 2030 would be eligible for this tax holiday. So this shows a clear intent on the part of the government. Lastly, I feel there's a good push towards electronics manufacturing from all aspects, whether it is income tax, indirect tax, or policy. We'll hear more about it in terms of tariff changes on the customs side, but I want to highlight one important amendment which enables the flow of technology and services into electronics manufacturing sector with respect to non-residents providing technology, intellectual property, and also services for setting up these units, which will do manufacturing of electronics in India. So these are some of the good positive announcements which will help corporates. Maybe if I were to nitpick a little bit, I would complain about the amendment which restricts the carry forward of losses in case of a merger. Nishit, I think there was a long-standing ask, and the middle class does have something to cheer about, it seems, this time. But I would love it if you can elaborate.
Yes, thank you, Sid, and you're absolutely right. The finance minister has listened to the middle class, and let's call it a dream budget for them. She has endeavored to leave little more money with the individuals by reducing the tax outflow and at a macro level to boost consumption. So a very good initiative, so to say, by our Honorable Finance Minister. What is it that is thought through here? It's important to understand the endeavor is to shift more and more taxpayers to the new tax regime. There are 8.75 crore taxpayers, and if these taxpayers move to the new tax regime, there are benefits clearly prescribed for them. Let's go through what are the benefits. Yes, we should know that 72% of the taxpayers who have filed the return on or before 34 for the year financial year 31st March 24 have opted for the new tax regime. Currently, under the new tax regime, we have 6 slabs. It is proposed to increase the number of slabs to 7. Yes, there are no such changes prescribed under the old tax regime. The exemption limit, which is the minimum threshold exemption, has moved up from 3 lakhs to 4 lakhs per annum. The highest slab has moved up from 15 lakhs to 24 lakhs. A new tax rate of 25% has been introduced. The rebate, which was earlier available up to 7 lakhs, has now got enhanced to 12 lakhs, which means while earlier individuals with income up to 7 lakhs would not be liable for tax, has now got increased to a limit of 12 lakhs. What is the precondition here? The precondition here is that if you have income which is subject to tax at special rates, which means let's say income from capital gains or income from lottery, you will not be entitled to rebate of this proposed 12 lakhs on such income. On all other incomes which are taxable at the prescribed rates, the rebate will be available. To summarize, individuals earning income up to 12 lakhs will not be liable to tax. In these provisions, if we look at the maximum saving an individual could get, it would be in the range of 110,000 rupees before applying the surcharge and the education cess. So just a couple of examples, if an individual was earning 18 lakhs, as the Honorable Finance Minister said, there would be a saving of 70,000, and for a person getting 24 lakhs, the saving would be approximately 110,000, as I mentioned. Another interesting provision that is proposed in this budget is that the exemptions for computing the perquisite value of taxes is currently 50,000 rupees. So if you are getting perquisites in addition to salary amounting to 50,000 rupees, there would be no tax. Similarly, if your employer is providing a perquisite of overseas medical treatment, then there would be no tax up to 2 lakhs. It is proposed to increase these limits. We shall await for notifications for these limits to be increased. Back to you, Sid.
Thanks, Nishit. I think some of the demands seem to have been met of the middle class. I think, could you also just explain a little bit about the self-occupied 2 houses which she touched upon, and also a little bit, do you think now it makes sense for people to consider NPS more seriously?
Sure, Sid. Thanks for bringing these up. Earlier, or under the current regime too, an individual having 2 houses can claim the benefit of interest and as a self-occupied property. However, there were certain preconditions attached that, the reasons for which the uh, apartment cannot be occupied has to be justifiable and so on. Now it is proposed that no such reasoning would be required and deduction for two house properties under the self-occupied property would be available to the individuals. The second thing or the second proposal, Sid, like you asked me, is for the NPS Vatsya scheme. So what is this scheme? Very simply, if a parent or a guardian is making contributions for the benefit of a minor, then those contributions up to 50,000 rupees would now be available as a deduction, provided the individual is filing the return under the old tax regime. Mind you, this deduction is not available under the new tax regime. Now, for any prescribed purpose which is approved, if the individual has to withdraw monies from this account, then up to 25% of such withdrawals, 25% of the contributions withdrawn would not be taxable. That is important for us to understand, that if the withdrawal is done by such parent or guardian, because once the individual, the child is a major, the rules would appropriately change. There is one more small amendment with respect to the NSS, which was a sunset clause, whereby individuals were compelled to withdraw their contributions. Some people who couldn't had appealed. There was a provision that they would not be getting any interest, but there would be a tax liability for a subsequent withdrawal. It is now proposed that such withdrawals would not be taxable. So, said broadly, this is a summary of some of the proposals with respect to personal tax. Over to you.
Thanks for summarizing that so well, Nishit. I think definitely more money in the hands of the consumer, and that shows in the consumer, some of the consumer stock prices also. Those are the only ones that seem to have gone little up in the otherwise flat rally today. So I think with that, I'd turn to Anand and maybe talk a little bit more on the financial services side, because that's an area that you specialize in, and also there have been some interesting announcements there, both for individual and corporate. So would you like to give us, Anand, the broad overview of the key policy and tax changes first?
Sure. Thanks, Sid. So I'll just start with the key policy changes, which has been part of the budget speech. Three important changes from a financial services perspective, which are relevant, and I think everyone should be sort of looking forward to. The first is the revamped CKYC. Now we are all aware that a lot of times we have to give our KYC details to each organization, to each financial institution, whenever we are transacting with that organization. So the entire endeavor of the finance minister, and therefore also the overall sort of regulators and the participants ask, was that if we can create a CKYC, which will enable as a common portal to retrieve all the KYC documents pertaining to the investors, and the investor doesn't have to again and again give those information back to them. So with that objective, the CKYC is something that is now confirmed, and we will be seeing a little bit of more details about how this will be coming through, and how this will sort of get all of us not to share these details again and again. The other thing which was also a matter of sort of again ask of a lot of corporates, was that if there is a speedy sort of process for company merger, which will again sort of save time, given the fact that corporate mergers are the need of the day. So the government is also going to come up with regulations about how this can be achieved by way of to sort of get this speedy sort of approval in terms of the corporate play which is being sort of asked. The third and the most important point, or I would say themes, One is on the International Financial Services Center, IFSC, where there has been a lot of ask with respect to changes in, or rather increasing the amount or the income level of the activities that can be considered as completely tax exempt. The finance minister has included few other specific incomes, transfer of shares as not taxable in the context of certain businesses. That's one part of it. Second is the sunset clause with respect to the start of the business. So those specific sunset clause will basically now has been extended for another 4 years, which means that now the businesses can start up to that extended deadline. And then the final thing is about how the governance and how the process with respect to the IFSC administration is something which also will need to be, which also has been changed. So net, I would say that a lot of announcement in the context of IFSC again to boost, provide impetus to this very important regime. One another thing maybe which the viewers will be very interested is that virtual digital asset, which is your Bitcoin, is now going to get tracked by the income tax authorities by way of increased sort of reporting requirement, by which now any purchase of Bitcoin will need to be reported by those institutions back to the income tax authorities to track whether those are being sort of the appropriate amount of taxes have been paid in the context of those assets being transferred. So yes, I mean a lot of sort of important changes, a lot of sort of importance, but overall I think yes, it's been great. So back to you, Siddharth.
Thanks, Anand. I think with the bounce back of crypto, something was expected, I'm sure, and that's where we see this reporting and tracking mechanism. On the individual side, also there's some tinkering, maybe on the ULIPs and mutual fund side. Maybe you want to clarify some of those aspects for viewers.
Absolutely, Sid. So I think one of the other changes which was again required a clarification and again a welcome move is you will be aware that the finance minister in the past budgets have sort of specifically restricted that one will not be able to get a complete exemption from ULIPs. If at all the threshold of premium, which is 2.5 lakhs, is exceeded. So the overall premium going more than 2.5 lakhs will make your income, the income which you receive from insurance company not taxable, will be taxable, right? But how does one get taxed on that? So the finance minister has now clarified that the ULIPs which are not exempted will henceforth be considered as capital asset and will be treated at par as your equity oriented units, right? So the taxability is now simpler and easier. The ones which are unexempted will sort of qualify and you will be subjected to 12.5%. Interesting point is that within that, if there is an investor, and this is more in the context of IFSC, if a non-resident investor is taking a policy from a unit of an insurance company in IFSC, there is no threshold. So they can have as many, the premium policy can go about 2.5 lakhs, and the finance minister has specifically mentioned that any of those policies will be completely tax exempt. So again, an impetus to the IFSC insurance companies to be at par with overseas insurance companies, which are also offering a complete exemption in the context of those policy taken. So again, a welcome move. I would say in the context of mutual fund tax TDS rationalization, some threshold change. The income from mutual fund, which were earlier had a threshold of 5,000, will be increased to 10,000, modest increase. And so would be the interest which you earn from securities, which was earlier, there was no limit, will now go to 10,000. Dividend income which you receive from company, again the threshold is moved from 5 to 10,000. So again, a little bit of tampering with respect to the threshold level, making it that small investors can be completely moved out of the TDS regime. So I would say again, overall good measures, good changes, and hopefully this will induce more investors to sort of chime in and make most out of the financial services market, and that's what we think.
Absolutely.
So back to you, Siddharth.
Absolutely, Anand. Thank you. I think continued focus on IFSC from the government for successive budgets now, and seems that will continue. Moving on to the manufacturing and Make in India theme, and I would like to bring Anshul in here on this one, because on that theme, it seems that the FM has, looked at the tariffs and customs partly, as was promised in the last budget, in that direction. So, can you just throw some light on that, on how it, what changes are proposed and how it impacts?
Sure. So, Siddharth, I think it's been clear that government is, past several years, government has been focusing on the manufacturing in India, to promote manufacturing in India. And even in this budget, it has come out very specifically, and the FM has specifically picked up certain sectors like toys, leathers, food processing, EV, where the intent is clear that they are going to look to promote more and more, manufacturing here in India. That could be by way of setting up specialized zones for manufacturing, bringing in certain schemes. Rate rationalization has also taken place in that context to bring down the cost of production here in India vis-a-vis, compared to the imported price. So we definitely believe that the government is currently focusing to promote manufacturing in India. But apart from that, if I look at it, from a customs perspective specifically, there has been two focus. One, we talked about the rate rationalization, and the second is the ease of doing business. Under customs, we have so many rates, tax rates or duty rates. What government has done is that they have brought down those rates to specified rates, let's say 5-8 rates, where they are saying that duty would be applicable only at those rates. Of course, in not all cases, the effective rate of duty has gone down because there has been an introduction of additional cess, which is agricultural infrastructure and development cess. So it will cover up the reduction in the customs duty rates in tariff in most of the cases, but definitely in some cases the sector will get the benefit. Apart from that, there are two another important changes, again focusing ease of doing business. One is that when an importer is importing goods into the country, in certain cases where the duty is not finalized, the goods are cleared on provisional basis. Now, finalization of that provisional clearance takes number of years. What government has done in this budget is they have put in a limit of 2 years that the tax authorities have to close the assessment of those provisional clearances within a period of 2 years. Of course, there is an extension of 1 year that can be granted, but within that limited time frame, the government has to close. Otherwise, if the duties or if these clearances are getting finalized after a number of years, it adds to the financial burden in terms of interest and, again, the working capital gets impacted. So that's a welcome move. Second is on the import. Again, it is with respect to imports that when you're importing goods, once you have imported the goods, in case if there are any errors that have happened at the time of making declarations in your bill of entry while clearing the goods, today we do not have a very specified mechanism to go back and correct that error. And because of that, the businesses used to struggle if they have to correct any error in the declarations that they have made while getting the goods cleared. There, government has brought in a provision whereby now you can, even after the clearance of the goods, you can go back to the customs authorities, you can make the amendment, and if required, you can pay the additional duties, or if you have already paid additional duties, you have the ability to claim a refund of that as well. So in my view, these two changes will bring a lot of relaxation for the business in terms of managing the work. On the GST front, if I talk about, largely the amendments are pertaining to the announcement that have already been made by the GST Council. The important one is, this long-pending debate of eligibility of credit on construction services for an immovable property. So that amendment has been brought in that instead of plant or machinery, the law reads plant and machinery. We'll have to see the fate of it because it's a retrospective amendment that has been introduced, and it has been introduced pursuant to a Supreme Court ruling. We will see what and how it takes shape, but definitely, likely to challenge, in my view, before the court. So this is all from our side. I think the most important one, which is we are looking forward to, is the new income tax code. And with that, we come to an end to this session. Thank you everyone for joining, and have a great evening.